We have massive news for Tesla stock, and no, it's not the fact that Tesla was down big yet again today and almost exactly hit the 200-day moving average. No, it's not that. And it's not the fact that investors, get this, ready? Are you ready? I hope you're prepared just to be mind blown. It's not the fact that investors are more bearish now than 2022 or COVID. What about even the great financial crisis? We're up there with the levels of bearishness, emotions, and sentiment out there by investors. Take a look at this. The AI Investor Sentiment Survey has skyrocketed in the amount of bearish investors, now at over 60%. In fact, this is the 7th highest spike of bearish investors ever. This is essentially matched up with the bottom of the 2022 bear market. In fact, by the time investors are this bearish, the S&P is on average down 27%. That's crazy. But we will talk about this more in depth in just a few moments. First, let's go over the Tesla stock news today. And we actually have a lot of news today, but first and foremost, this headline did get Tesla stock moving higher. Apparently, Tesla has filed an application for California's transportation permit for autonomous vehicles. And I do think this could be a headline, possibly, maybe, that the stock reacts positively to, considering we virtually hit our 200-day moving average today. The low of the day for Tesla was $280.88. 200-day moving average sits at $278.18. So about $2 off of that 200-day moving average. Close enough in my opinion. And the stock is down 40% from all-time highs. People have essentially thrown in the towel and said, yeah, this stock, we don't want to own this at all. We don't give a crap about what's going on with the business. Get us out of Tesla. That is what people have done. And I do think people are going to regret that if they're selling their Tesla shares at these levels. Unstrat's Mark Newton is back with his latest Tesla stock forecast. He nailed past predictions, calling the 143 bottom, the 265 breakout, and a run past all-time highs. Now he's even more bullish, calling for $614 by year-end or early 2026. He says the 270 to 275 level is the strongest near-term level on a break of 314, and structurally, this decline is nearing an inflection point. I would also point out that historically, Tesla tends to bottom when it gets oversold. It doesn't tend to stay oversold for long. You can see below this yellow line here, once you get to this level, you tend to see a sharp bounce, okay? Almost every time. You don't stay down here for too long. And it's very rare that you're down here for even more than a couple of days. You have to look at events like the end of 2022, when everyone thought we were going into a recession, when Elon was selling a bunch of Tesla stock. Like, that's an instance where you were actually oversold for about 10 days. But other than that, you tend to bounce like the very next day, maximum like 2 to 3 days later. And you've been there since, technically 2 days ago now. Since February 25th, you have been oversold. So history, just don't shoot the messenger here. History would say Tesla stock is going to bounce soon. Now, this is also pretty interesting. Elon Musk says that he has heard that FSD in China was the leading topic on Douyin. Now, Douyin is a short-form video sharing app that's popular in China. It's effectively the Chinese version of TikTok. So FSD is grabbing some real attention over in China. And here you can see in this video, FSD is managing some very crazy traffic or just really roads in China. And this all, was possible via just videos from the internet. And give it a second, it's going to successfully manage this turn. Like, these are very narrow roads. It's actually incredible what Tesla has been able to do here. And it is confirmed a US customer in New York has received their VIN for a new Tesla Model Y. The VIN shows this unit is coming from the Gigafactory in Texas. Nick Cruz Patain on X says, quote, Tesla sales in Europe tumble year over year. Meanwhile, Tesla simultaneously just executed one of the greatest global changeovers in history at 4 factories. The media will twist words any chance they get. You know, and it's truly crazy because this like 45% year over year tumble in Tesla deliveries is the biggest spreading of misinformation I have ever seen in my entire life. Like, think about this for a second. In January 2024, so a year ago, Tesla delivered about 18,000 vehicles in Europe during January. In January of 2025, Tesla delivered about 9,000 vehicles in Europe. Wow. So 9,000 vehicles missing year over year has costed Tesla hundreds of billions of dollars in market cap. When nobody's buying the Model Y anymore, have they just given up on the Model Y? No. It would be like buying the iPhone 16 a month before the iPhone 17 comes out at the same price. It's idiotic why you would do that. Like, you would have to be lacking some kind of competence to do that, unless you just, you know, had to have the old Model Y. Like, for whatever reason, you didn't like the new Model Y, which just is not a thing. This is a massive opportunity. The Cybertruck X account posted this video that says, me coming into your life, whether you like it or not, which is kind of hilarious. And we can see a delivery site of the new Model Y yesterday in China with multiple Model Ys coming out. I mean, people are excited. The Model Y is going to sell, like Elon said, quote unquote, hotcakes in China, the US, Europe, pretty much everywhere. Now, I think this is a great chart to show you just the extent of the misinformation out there. This chart is from Roland Percher. Here you can see the red lines are 2025. The yellow lines are 2024, and the green lines are 2023. Okay, forget the green lines. Look at the yellow line versus the red line. Yeah, sure. The yellow lines have been better than the red lines, right? This is what Wall Street and retail investors have grown so nervous about. Look at this discrepancy here. It's actually idiotic. Okay? Look at this. And let me just pull this up. Do you see? We're all nervous and scared and terrified because of a couple hundred vehicle difference in the first couple of weeks of 2025. But look at this. The gap is what looks like actually narrowing. Over the next couple of weeks, as new Model Y deliveries start, you're going to see the numbers get ridiculous on a year-over-year basis. Tesla deliveries are about to explode as the new Model Y starts being delivered to customers. Because in fact, you can see this over in China right now. There's virtually no Model Ys being sold for the past 4 weeks, but Model 3s look just fine. They look great, in fact. Did people all of a sudden just stop buying Model Ys? Well, yeah, because the new one's coming out. You're going to see deliveries across the world start to skyrocket. And then people are going to look real stupid as the stock is down over $200 per share from its all-time high. People essentially panicked for no reason. Now, Morgan Stanley analyst Adam Jonas said he was left speechless after he spent an hour this week being driven in a Robotaxi in London. Adam rode in a development vehicle from Wave that used 7 cameras, no radar, no LiDAR, no HD maps, and no labeling. It was all end-to-end AI-enabled foundation modeling. He said it drove with confidence and like an experienced London cab driver. Recent video from Wave of a 75-minute uninterrupted autonomous drive in central London, which, again, this is not Tesla, this is Wave. I'm sure most of you guys have never heard of this company, but it is further validation for those investors that need to be handheld into the prospects that end-to-end fully autonomous driving is the only mass market solution. This just kind of goes to show exactly that. And you can see here over 150 refreshed Model Ys have been spotted at Tesla's Fremont factory just today. And here you can see more in depth about that permit that we discussed at the beginning of this video. It says Tesla has officially filed an application seeking approval to offer ride-hailing services in California. Tesla applied for a transportation charter party carrier permit from the California Public Utilities Commission. That classification means Tesla would own and control the fleet of vehicles. Tesla is applying for the same type of permit used by Waymo. Look at that. Tesla following through with their previous guidance of launching the Robotaxi network in Texas and California. Just wait when Tesla puts in a permit for New York or Florida or Vegas, which I expect will be coming and be this groundbreaking news for Tesla at some point later this year. And also in big news today, Tesla has won a ruling to limit damages in a U.S. lawsuit over Autopilot crashes. Tesla convinced a Florida appeals court on Wednesday to limit the damages it could be forced to pay in a wrongful death lawsuit, accusing the company of misstating the capabilities of its car's Autopilot system. The 4th District Court of Appeals in Palm Beach opens new tab a judge decision from 2023 that said a jury could award punitive damages, not just compensatory damages, in the lawsuit filed by the estate of Jeremy Banner. Tesla has won a ruling to limit damages in a U.S. lawsuit over Autopilot crash. Tesla convinced a Florida appeals court on Wednesday to limit the damages it could be forced to pay in a wrongful death lawsuit, accusing the company of misstating the capabilities of its car's Autopilot system. And it does look like Tesla has started hiring security at certain showrooms. Surprisingly, option activity from hedge funds and institutions today is actually pretty negative. You had 505 different trades totaling $567.1 million, with a positive order value of 13%. But I mean, let's think about this in context. Almost every day recently, we've had very positive option activity. Perhaps this could be a signal or a sign of a reversal for Tesla to actually get some negative option activity coming into the stock. Maybe we've flushed out enough and maybe the stock could start to move higher again. And well, here's a trend that has not changed. Short sellers continue to cover on their short positions, with about 300,000 shares today being covered on. And again, I would point out at the same time that everyone is super bearish on Tesla, big money is not. Quote unquote, smart money is actually very bullish on Tesla, with some of the lowest short interest numbers we have seen in Tesla's history. Technically, on January 31st, you had the lowest number at 2.13%. We did get a new update yesterday that showed the short interest rose to 2.2%, but 2.2% is still like, top 98% quartile here of lowest short interest readings for Tesla in Tesla's entire history. Like, people are very bullish overall on Tesla stock. Now, alongside investors feeling bearish at levels we haven't seen in a long time, the CNN Fear and Greed Index today is coming in at 22, which is currently in extreme fear. Market momentum is extreme fear. Stock price strength, extreme fear. Stock price breadth, fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. Junk bond demand in fear. And well, overall, yeah, looking rough in all of your categories. But I will give you a little bit of good news here. The VIX is down about 4% today. Oil is up 2.5%, and bond yields are moving higher. This is actually no longer like the recession trade taking place today. What we've seen recently is oil has been falling, bond yields have been falling as investors go out and buy bonds, and the VIX has been skyrocketing. Today, you're seeing the opposite of that, which is actually a very bullish sign. Investors today are feeling more confident in the state of the economy. And it really has to do with durable goods orders because there's a lot of conflicting data today. So I think it's durable goods orders that is causing some of the nervousness about a growth scare to die down. Durable goods orders month over month came in at 3.1%. Last month was revised upwards from negative 2.2% to negative 1.8%. The estimate was 2%. So durable goods orders came in better than expected. The GDP growth rate quarter over quarter for Q4 came in at 2.3%, right in line with the estimates. But wait, initial jobless claims skyrocketed to 242,000. That's not exactly great. And pending home sales month over month came in at negative 4.6%. You were expecting negative 1.3%. So bad real estate data, bad initial jobless claims data, but good durable goods orders and in-line GDP growth rate. And you can actually see here, this was the largest spike in initial jobless claims since Q4 of 2024. But back then in Q4 2024, we had hurricanes and we had floods and, North Carolina. And that's why we kind of assumed the initial jobless claims were spiking. This time around, we don't have any of that to kind of put the blame on. In fact, a lot of people may try to put the blame on Doge and the government cutting jobs, but that's not what happened. When you look at this state by state, Michigan was the highest contributor to weekly initial claims last week. Massachusetts, California, Illinois, and Ohio were top 5. Pennsylvania, Wisconsin, Iowa, Rhode Island, and Florida were as well in the top 10. You're not even looking at the DC metro region that made the top 10. So this is more broader weakness, as some people would say, for the entirety of the economy, or at least regionally speaking. So that is definitely something to keep our eyes on. Now, Ryan Dietrich says, credit markets continue to show very little worry or concern. I trust those way more than a poll. Investors might be more worried today than during a 100-year pandemic and bear market, but credit markets are telling us this is simply seasonal weakness and nothing more. You can see the U.S. corporate triple B's credit spread is really not reacting. And essentially what if you want to boil this down, what this says is bond market investors are not concerned about potential bankruptcies in the actual economy, which usually means the stock market is just going through a temper tantrum and all things are fine in the economy. What's also interesting, as Ryan Dietrich shares on X, only once in history where there were more than 55% bears in the AAII poll, and the S&P 500 was closer to new highs than this week. It was October 92, and the S&P 500 gained 25% the following year. Small sample size, yes, but quite interesting. Now, Renaissance Macro Research says this is the most bullish sentiment indication right now, in their opinion. High levels of policy uncertainty tend to be good for forward returns. They say we fade the fear. And you can see right now, you are very uncertain about forward policy. And whenever this happens, you tend to do very well in markets. Now, some of the big headlines that we woke up to today that caused markets to sell off was Trump that says Mexico, Canada, tariffs to be enacted on March 4th unless there is substantial improvement on the flow of fentanyl. He also reiterates the April 2nd reciprocal tariff date remains in full force, and that China will also be charged with an additional 10% tariff on that date. So this morning was kind of like a rip the band-aid off kind of moment. 10% tariff on China, reciprocal tariffs on many countries, and the Canada and Mexico tariffs are going back into effect. So what new information are we going to get at this point that's worse than that? Unless he like does a 25% tariff on China or something, but you're already at 20% with an additional 10% tariff. So I actually do think it's quite logical that this could be a bottoming in fear and likely a bottoming process in markets. Now, it'll be interesting though, because look at this technical setup on the S&P. If we close near the lows of the day today, things are going to look really bad. If we can close towards the highs of the day, then things are going to look much better. So we really want to see what happens in the final 30 minutes or so of the trading day. And that will tell us a lot about what happens next for markets, because we're at this 100-day moving average. That happens from time to time during corrections, but we have not hit the 200-day moving average during a correction since October of 2023. And I mean, that's down here on the SPY at 567. Like, that would be substantial further downside from here. That would be downside of approximately 4.5% from here. So if we do not hold and we, look bad into the close, you could be targeting another 4.5% downside. But again, for the bull's sake, I think there is reasons to be optimistic. Again, just when fear is this high, it's hard for markets to continue to fall because we're all already bearish. People have already capitulated. And I think that's kind of where we are at now. But we will have more to talk about specifically relating to this in the next video coming out at 8 p.m. Eastern Standard Time here on the channel. In the meantime, hit the like button and subscribe to the channel if you have not done so already. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. Yes, I did buy more Tesla stock today. I think this is just too good of an opportunity to pass up. So let me know your thoughts. You guys have a fantastic rest of your day, and I will see you in the next one.